Hey everybody, welcome to the ANDIKA Bulletin for Monday, 21st of November 2022. So after last week's CPI-driven market response, the Fed spent most of last week trying to crush the pause, pivot, slow down, believing train. Over 16 different speeches were made last week, all basically suggesting that rates are going to be higher for longer. There is no pause and there's no pivot imminent or anything coming on the horizon. That aside, though, didn't stop the US markets from posting, some gains on Friday. As you can see, the Dow was up about 0.6%. Nasdaq was up about half. The S&P was up half, and the Nasdaq actually just crawled to be into the green. Because all the Fed speak of last week, terminal Fed rate expectations are basically surging to well over 5%. Remember, the Fed rate at the moment is between 3.75 and 4%. So there's still more rate rises to come from the States. And just some interesting charts that I just also came across on the weekend. There's a leading economic chart, or the leading economic indicators chart, which, as you can see here, is down 10 months in a row, and it's now negative year on year. So that's a sign things are starting to crack. Just some other notable charts that I came across as well. Remember when we had the big CPI number that came through that was really good? It came in at 7.7% instead of being the prior of 8.2%. And we basically saw the unprofitable tech stocks took off. Well, last week, those unprofitable tech stocks all got clubbed like baby seals. That particular grouping was down about 14% from Tuesday's highs, and that's after they had an initial ramp up of about 30%. And the short squeeze has also started to tumble back as well. So the basket of stocks that sort of represent the stocks that are all under the short squeeze scenario, they all tumbled about 11%. So you can start to see things are starting to, crack again. The veneer is cracking. And just some quickly based stats just to show you where we are in terms of where the United States is. The Nasdaq's down about 30% year on year now. Small caps down about 25. S&P's down just under 18. And the Dow is the best horse in the glue factory, down only around about 9%. What's also been interesting that hasn't had a lot of coverage was on Friday, the VIX, that's what measures, volatility, puked down to a handle of around about 22. And so I've got to ask the question, what's next for the VIX? Because if you look at this particular chart, you can see where the VIX was going in 2007 and 2009. That's the blue line. And here we are in the current red line. Something's about to give somewhere or other. So that's something to also take into account. So again, leading indicators are looking a little bit dark. And just some other sort of notable charts that I've come across here as well. Mainly this one here. At the moment, 1 ounce of gold now buys 22 barrels of oil. Gold in the last week and a half has actually been pretty good. It sort of moved up over $1,750 US. Oil, on the other hand, is down back around $80 US a barrel. So we haven't seen that translate into the pump at the moment, but that's where it's sort of come into. And then I'll just finish up with just two other particular charts, and then conclude then with my favorite chart. Here's this particular one, talking about the US 2 and 10 yields. The curve is inverted, and we can see here from the particular chart that when that inversion, breaks out of that pattern, that mainly then indicates, the US market is in a recession. You can see the very small one that happened during the Wu flu, COVID in March 2020, but the bigger one there, as you can see, is in 2009, and that was with the GFC. So that's another leading indicator pointing that, there are some very, very big troubled waters ahead of us. And then there's this other particular chart, and everyone goes, homes are the castles. Well, have a look at this. US pending home sales is down 30% year on year. and we can see where we are right now versus where it dropped to just when COVID came out in March 2020 versus what it tanked down to, and you can see in 08 and 20 when it's down to 24%. So there are some really, really dark clouds out on the horizon. Anyway, be that as it may, our futures are up about 24 points leading in for the start of Monday. And again, remember this chart. Always look at this chart. This is where you are right now. And we've got a Fed open market meeting happening on the 13th to the 14th of December in a few weeks' time. And keep in mind on that chart I just showed you on the VIX. Anyway, a bit of doom and gloom, but hey, you might as well get the good medicine here, and you might as well know the truth and know where things are at. So that's your start for the week. We'll catch up again hopefully tomorrow. And if you happen to like the video, please make sure you hit the like button down below, subscribe to the channel, and feel free to post the video on to all your friends and mates, because at the end of the day, it's just about information to try and help you make better decisions when you're trading the stock market. Until then, we'll catch you later.